Holy guacamole, one of my stocks reported earnings today and the stock is up 6% after hours as they report a huge growth. Hello everyone, welcome back to the channel. Today we're going to talk about Shift Technologies, how they did last quarter, how their stock has been doing, my position and my expectations for this company. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. Now we can see here that the stock was down 1.35% during the day and many were expecting bad earnings because of that, but certainly this stock reported their fifth quarter with excellent growth and we're gonna see that now. But we can see that the stock is actually up 6.25% after hour, even though it got to 9.45%. But we can see here that certainly the stock is trading at $7 per share right now with a market cap of $552 million and a price to sales ratio of 1.56, which if we compare it with Vroom, which is one of their competitors, it has a market cap of $2.54 billion and currently has a price to sales ratio very similar of 1.30, which is less than Shift at this moment, but we're going to see something different between the both of them. Then Carvana, the biggest competitor here, has a market cap of $50.8 billion and has a price to sales ratio of 2.52. The thing here is that if we check what analysts are expecting by the end of this year, we can see that for Shift, they're expecting a growth of 203% for this year and 71% for next year. For Vroom, they're expecting 131% and 46% for next year, and then 123% for Carvana for this year and 31% for next year. So yes, definitely Shift is the smallest between the three of them, but it is the one with most expectations in the coming years of 203% in 2021 and 71% in 2022. But something we do have to take into consideration is that the short interest for this company is a lot. It's 24.51% at the moment, and many were just tweeting about this and saying that maybe the shorts are going to make this stock drop right now after hours or after their earnings call, as the shorts are really high at the moment. But we can see that they certainly had a nice earnings, a nice growth this quarter. As you can see here, they sold 6,487 e-commerce vehicles, which is up 120%, but their revenue grew 200% year over year, 200% year over year. And this is a company that has been having this kind of growth for the last 5 quarters, maybe 100 to 150 and even 200%, which in my opinion is huge. They saw continued growth from their brand awareness campaign, which we know how important brand awareness is for every company. Just take a look at Tesla or even Apple. The brand awareness for Apple is incredible, and it is what has made the company this big. Then they launched an acquisition market in Houston. But we can see that the revenue has been having a huge growth since last year. They were kind of stable for 2019 until the third quarter of 2020, as it grew from 73 million to 106 million to 155 million to 180 million. And this is quarter over quarter. So from quarter 3 2020 to quarter 3 2021 was from $60 million to $180 million. So they have been having a huge growth quarter over quarter and even more year over year. And now see what they're expecting for next quarter. But now their e-commerce units sold were 180% growth, which we're going to see later. Now for each of these metrics, they exceeded their own guidance provided by their second quarter, as well as beating analyst expectations in both revenue and earnings per share. I'm going to show you guys that. Now we can see here that last month they launched an acquisition market in Houston, further expanding their presence in the state of Texas, and we expect to have that fully operational as a two-side market in the near term. Now, something very important for this type of companies is their customer acquisition costs, as that can be huge and that can affect their profitability, but we can see that has been decreasing a lot since first quarter of 2021. Take into consideration that this is quarter over quarter between quarter 1, quarter 2, and quarter 3 of this year. So it has been decreasing 46% between quarter 1 and quarter 2 and 12% between quarter 2 and quarter 3. Now we can see that their balance sheet is very nice. They have $354 million in total current assets and $372 million in total assets, which increased a bit since December, and mainly because of the current assets, as we can see that their inventory almost doubled from 49 million to $88 million. Now they have total current liabilities of $101 million and total liabilities of $256 million. But we can see that increase a lot from 74 million to 256 million in comparison to December 2020, but it was mainly because of this convertible notes, which they did not have in 2020, and now they have $144 million in convertible notes. Now, their revenue, we know that it grew a lot year over year, 200% to $179.9 million, but their e-commerce unit grew 222% this last quarter, and their other revenue 205%, while their wholesale vehicle revenue 84%, which is very impressive that their e-commerce is growing way more than their wholesaling, but still they have been having a huge revenue growth. We can see here that analysts were expecting, as I said, $165 million, and they were able to achieve almost $180 million. And also they reported an earnings or net loss per share at this time of 48 cents, while analysts were expecting a loss per share of 52 cents. So they beat analysts' expectations as well in here. Now, their cash flow, we can see that the stock compensation expenses did increase a lot from $1.4 million to $18 million. Cash used in financing investing grew as well, as they purchased property and equipment a lot this last quarter in comparison to 2020. Now they did have $154 million in net cash and cash equivalents and restricted cash provided by financing activities. As we can see, it grew from $24.5 million to $154 million, mainly because of these proceeds from issuances of convertible notes of $143 million. Now their e-commerce unit grew 120%, as we said earlier, their wholesale unit 85%, and overall 100% total units sold year over year, which obviously is a nice growth, as they are the smallest at the moment, but they need to continue having this kind of growth. Also, the average monthly unique visitors grew from 379 million to 534 million. Now, for the coming quarter, for the fourth quarter, they're expecting a revenue to be in the range of $180 to $188 million, which is an increase of 145 to 156% this year. And for 2021, they expect a revenue of approximately 621 and 629. But if we check what analysts are expecting for this company, they're expecting 166 for next quarter and $594 million for this year, which is less than what they are expecting for next quarter and this year as well. So even though this is a huge growth, 126% and 203%, they're expecting to have a way better growth for their company. And now they're expecting for this year to end up with e-commerce units of 23 to 24,000 units. Now we can see here that certainly analysts are expecting this stock to go up between $9 to $17 per share, which on average is $13 per share, which would be an uptrend of 85% at this moment. And that is going to be huge, because I believe that this stock is really undervalued at the moment. It is up 6.71%. But I believe that is really undervalued with the amount of growth that they've been having. They have a market cap of $552 million, and they're expecting a revenue of $621 to $629 million for this. The company is not profitable at the moment, and it's not expected to be profitable in the coming 2 years, but we need to continue seeing this kind of growth and them to continue investing in their company, to continue seeing this growth and expansion within the United States, as they have been expanding really fast. Now, I do have a position in this company. As you guys know, I've been investing in it. It's not a big position, but it is currently almost break even, as I'm down 88.88%, as my average cost is $7.21 per share, and the stock is currently up 8.99%, as you can see here if this focuses. And it continues going up. It only represents 2.54% of my portfolio at the moment, but I've been adding constantly, almost monthly, as the stock has been trading at almost the same price within the last few months. Yes, it went up to $10 per share back in February of this year, but it has been decreasing. It has been going down since then, and it is down 22.37% in the past year. So I've been adding more to this position as I believe it is really, really undervalued. But we know the amount of short interest that this stock has right now. Now I'm gonna leave you here my Disney analysis with which I just posted this morning. Thank you and see you next time.